The Fed has contributed to the rise in the stock market, but they are not alone. All central banks have followed the same policy. Print money, give it to banks, give it to corporations, and don't tell the public. An excellent policy which has worked rather successfully to support equity markets. With some minor digging, however, you will know the truth. And that's why you came here for the truth. So let me unveil that for you. Today we are going to look at a few charts. I want to look at a few articles. Let's begin with this. I put this one right at the front because I believe it is the most important. This was something that I believe to be very truthful, very telling. It is an eye-opener for many. Look at it. The G3 central bank balance sheet is obviously supportive of equities, particularly the NASDAQ and even more in particular the FANG stocks. What we are seeing has been, no doubt, a very significant rise, but it directly correlates to the central bank balance sheet. That's clear. There is no way to deny that. Then we see the exact opposite, and that is commodities, the dollar, US macro, and the yield curve all moving in the exact opposite direction. We're witnessing this over several months. It's not just something that overnight we had this little blip that occurred. No, this has been going on for several months now, into last year essentially. Let's take this for a moment and break down what this could mean. If equities are being supported by central banks, I would say yes. You may disagree. Others would say, yes, it's true, but let's ride the wave. That's fine. What if they pull back? What if central banks decide to pull back, as they all have seemed to be doing so, at least in rhetoric? Are we going to then hedge our bets? Are we going to pull out of the market? Or will this just continue on because Janet the Felon Yellen said there won't be another crash? Well, I'll leave that up to you to decide. I'm just showing you the facts. Take a look at this. You decide for yourself. Let me move on right here. Looking at this, the Canadian dollar has been suffering. I remember a time when, not too long ago, when the Canadian dollar and the US dollar were at par. That was something very interesting. And then, of course, things changed and the Canadian dollar took a big hit. And those in the business world, those in government, they believe that a weak currency is a good thing. You get that a lot. I think that is a silly notion for the most part. They would suggest exports and this and that, but ultimately, I'm not one to really believe that overall. And we can see that recently with Canada saying that they're potentially going to increase rates and they're going to work on strengthening the loonie, this and that. It has had a recent uptick. Ultimately, when the time comes, all countries will destroy their currencies. That's a fact. This right here, Carney saying the same thing. We are going to pull back on our currency manipulation, printing money. I don't know if that's going to happen or not. I mean, if it is, consider it to be the beginning of the end for the bull market in equities. It's just, you can't help it. If it's being supported by that, you pull the crutch out, you need to explain to me what's going to push it up. The invisible hand? I don't know, you tell me. US retail mall vacancies increased in the second quarter and somehow rents were slightly higher. Real estate research firms, and then it goes on. The national retail vacancy rate rose to 10%, and I think that is a very high number when you think about it. 10% of these are vacant. And then you look at all of the malls which have schools and libraries and all these different things that are being put into malls as a result of having all this empty space. So they're offering up good deals, and it's something to take a look at. Yes, there's probably too much of this commercial real estate, the malls, going on in the first place. You look at it compared to areas like Europe, for sure, you see that a lot. However, I think there's just a big problem with the economy in general. There's many things going on, but I do believe that the economic activity is declining to some degree. You just can't have debt expanding forever. There are borders that are reached, and you can't really breach them. Ultimately, you will have a financial crisis. That's what happened last time and seems to be happening again. For the first time since the financial crisis, the Fed clears all big banks' capital return plans. That's right. There will not be a financial crisis ever again. The Federal Reserve, the gods of money, have decided that that is the case. According to them, the Fed did not object to any of the capital plans of the 34 banks it reviewed. The stress test was implemented in the wake of the financial crisis, saying, we're all good, stress test passed, everyone did well, you get an A+, here is $1 trillion for everyone. Federal Reserve Chairperson Janet Yellen spoke on Tuesday and indicated that the financial system was not likely to experience another significant financial crisis in her lifetime. I talked about this in my previous video. Can you believe it? CNBC actually took the opposite side. If one assesses, check this out, if one assesses the impact of the new rules and regulations on this country, it is clear that the Fed has placed the United States at a greater risk of a major collapse than any time in the past 110 years, going back to the Panic of 1907. It's big to say that. I mean, that's bold. I'm not saying that necessarily. I don't know how big the next crash will be, but CNBC is making that claim, and when you go against the grain, it definitely is more difficult to do than just following in line with everybody else. So it takes a lot of guts to say that. All I know is that the central banks have been printing a hell of a lot of money. They've been doing so ever since the financial crisis, and if they pull back, there's nothing to support it. That's my argument. That's what I'm going with. I don't know if the central banks are going to pull back. If they pull back, my assumption is that there will be a crash. People aren't listening to me. They just don't listen to me. Maybe they read the title and they get thrown off. You know, you're only allowed a certain amount of characters. I can't write an article and put it in the title. It has to be something that jumps at people, okay? That's just the way it is, okay? This is media. I'm not ever going to be, I'm never going to be a liar. I'm never going to be one of those people who simply will say anything to get views. And I don't want to be inconsistent in any way. I'm saying, based on the facts, I have made certain claims, and I'm standing by those at this time. Look at the central bank balance sheets around the world. Look at the stock markets. They are very clearly correlated. Should the bank balance sheets decline, I expect the stock markets to go in line with that. That's just a fact. That's just the way I see it. So whether, it happens to a great degree or not, I don't know. That's up to the central banks. If you have a question whether there will be a collapse, or you're curious yourself, perhaps you got a lot of money in stocks, you should go and see Janet Yellen, have a conversation with her and ask her, are you going to pull back on your purchases? If the answer is yes, well, then we know what's happening with the stock market. If you found this video informative, please give me a thumbs up. Last but not least, if you found the video informative, you'll find my books even more informative. You can flip through them at Amazon. They have a look inside feature. And the first book, to give you a brief rundown, it's about the 4 asset classes and how to profit from them. The new book talks about familiar subjects, but I get into the money GPS strategy, and that's becoming self-sufficient, solar panels, reducing your monthly expenses, all that good stuff. So you can check that out at Amazon if you want the audiobook version. I know a lot of people are interested in that. It's of global economic collapse only. I'm still working on the other book as well. It's a little bit more complex. That's at themoneygps.com. You can check it out. Take care.